And welcome to the latest episode of Sweatin, Holland, Sweatin Money. I'm your host. Come on. Oh, wait. Before we get to that, let me read the mandatory disclaimer. We may or may not have ownership or other positions in the stocks mentioned on the show. Don't buy stocks basically off what you hear from this podcast, and always do homework. Do your own homework and research before investing in stocks. All right. I'm your host, Kong. And my co-host, Gibson, could not be here today. Due to technical issues that we had earlier, he had to leave. Anyways, let's get to what's in the news. The U.S. Federal Reserve's Janet Yellen spoke on Wednesday, February 10th, and initially sent stocks up. Then actually heard, when they actually heard the message where Janet Yellen mentioned that she was remaining cautious and left some room for how much and how quickly the Feds would raise rates, this note to volatility helped dampen expectations. Wednesday, February 10th was the House of Representatives Banking Committee meeting. Thursday, February 11th, she returned to Congress, this time for the Senate's Banking Committee, where she repeated her stance. The situation looks optimistic for the U.S. economy, but several factors internationally may dampen things. Her statements didn't help the stock market, and people were speculating that we're headed towards bear territory. Janet Yellen's comments that negative rates were still on the table definitely didn't help things. Plus, Sweden delved further into negative bank rates. Also, the South Korean stock markets did so bad they fell 8%, triggering their breaks on Thursday. But on Monday, February 15th, they were slightly up, following some good news on Friday and Japan's performance of that day. More on that later. Shipping containers are not as filled as they used to be. In other words, trading activity worldwide is moving lower and lower, which will be interesting. I wonder how this will affect rumors of Amazon possibly coming into this space. Will they get their hands dirty and try to revolutionize the shipping industry after all? We'll see. Whoops. Didn't jump too far. Now, those intertrading the relative strength index, which measures stocks as overbought or oversold, will be glad to know that European bank stocks are at an all-time bargain. They are way oversold. The scary thing is their oversell point is actually lower than what it was in 2008. And as oil fell further, OPEC came out and said that they were willing to cut production, sending oil coming back up, continuing the trend on Friday. Thursday, gold was doing really good on a major panic. Then Friday, people calmed down and gold fell very sharply. And yes, after a week of turbulent ups and downs, and especially 2 previous days of big downs, Friday ended up on a big up note. The question is whether or not it will last. Now, it's not just George Soros looking at the PRC economy negatively, but also investor Kyle Bass thinks that the Chi-Coms aren't doing aren't giving a truthful story about how their finances are, specifically their Federal Reserves, or not the Federal Reserves, I'm sorry, the foreign reserves and currency reserves that China has. In 1966, Paul Samuelson said that the stock market had predicted 9 of the last 5 recessions, meaning he was making fun of reading too much into the stock market. You can check out more details in. Oops. So you can check out more details in a Brookings Institute article. Let's see if it'll pull up. No, it's not going to pull up. Okay, well, here, let me pull it up then. Yes, this Brookings Institute article, which was written at the beginning of this month. Um, yeah, I'll subscribe later. All right, back to this. So, CNBC did a study of that phrase, and despite this joke, backtracking all the way to the end of World War II, they actually found that stock markets actually did predict the bear markets 53% of the times. The question is this worth looking into? It's kind of like asking, hey, is your next child going to be a boy or girl? Now, before the days of the sonogram, people actually had to guess all the way to the end of the pregnancy. Um, so, 53%, it's not that much more further from 50%. Even 60% wouldn't be that much of a predictor. So it's kind of hard to say. Really? You gonna do this to me? Oh, jeez. More technical difficulties. Slides get displayed. You want to try again? Okay. Wow, this is a first. Okay, sorry, folks. So with the technical difficulties, I don't think I can progress on with the slides here. Yeah, that's not going to work. All right. So I'm just going to have to read off script, and you'll have to figure out what I'm going to say. So you can check out our website. And we'll have more links in the show notes. So yeah. Now, Okay, may have found a solution. Or not. Yeah, no kidding. All right. Okay, let's move on. In short, the past several months, volatility has hovered around three things: oil, China, and possible US recessions. Actually, here. Sorry. Let's go to this, that, and the video's not up yet. So let's see here. Okay. Yeah. So in short, the past several months, volatility has hovered around three things: oil, China, and possible US recessions. The US recession seems least likely, even though Janet Yellen is unwilling to commit to saying firmly one way or the other. But her statements to continue with raising rates means things are looking good in the long run. Then, with OPEC statements to that uh, with OPEC statements saying that they're going to reduce production, um, things seem to recover, or things seem to be going good. Okay, so now here's the other thing. Um, Oil did. Whoa, that. That's why. Sorry. There we go. Although oil fell a bit on America's Sunday, so the last key thing is China's reforms, which will take time and won't happen anytime soon. Now we'll get into that. Actually, we won't get into that a bit later, so we'll cover it right now. Oil did rise back up on Monday in the international markets, although yeah. Anyways, we'll get to that later. One thing that the PRC's foreign reserves, hold on. One thing about China is that the PRC's foreign reserves are possibly much lower than they are reported. Um, the foreign website. Oh, am I okay? There we go. Having issues earlier. The World Economic Forum website asks if the PRC's policies are the right ones needed, but are they being miscommunicated? Possibly, there's a possibility of that, but if you are to believe the official numbers of the PRC's reserve levels, the issue is how liquid are those assets? Some say not enough. The oops. Now, the Peterson Institute talked to economist Angel Ubide on his views on what's going on with the ups and downs of the Chinese markets and some of the risks that the government is facing. And if you look at the week in review, we'll go ahead and pull this up. The week in review. So, things were going good up until about Wednesday or so. Things fell down slightly, and then they dramatically dropped on Thursday before rising back up on Friday. Um, we would look at today's performance, but the markets are closed for President's Day. However, internationally, they were opened. Let's see. And so off with a rebound of almost 4% of the news that oil was close to $29 a barrel. Gold also declined. Japan's yen was on a weekly increase of 3.1%, which was not what Abenomics was supposed to do. So now that it's fallen to 0.1% on Monday, this helps their plan of devaluing their currency to increase trade exports. However, uh, note that the Japanese GDP growth rate for the fourth quarter also came out, and it was lower than it was previously expected. Originally, it was expected that the Japanese economy would be at negative 0.3%, but came out at a level of negative 0.4%. So that is right here. Also, looking at the technical analysis, Japan still has a long way to go before coming back up to previous support lines. Okay, while that's loading. Monday, the PRC's Shanghai Stock Exchange opened with a 5% loss, but then gained slightly to close that gap to less than 2%. News that a 2% loss, that is, news that they would further devalue their currency news that they would not further devalue their currency helped it move higher to alleviate concerns. and then the president of the PBOC, the People's Bank of China, came out and made an official statement, which sent their stock market higher into a positive territory. Sorry. So let's skip that original section. I was going to introduce, and normally we have a couple sections here, but we'll cut those out. We'll go straight to the recommendation section. My recommendation is the Board of Governors of the Federal Reserve schedule website. For those of you who don't know already, this is the schedule of when the Federal Reserve is going to meet, and it's really important, especially for those of you who are investing in gold. Supposedly, every time the Feds raise the rates, gold drops about 10%. So, okay, so let's end it here. So, just a reminder, we may or may not have ownership or other positions in the stocks mentioned in the show. Don't buy stocks based solely for what you hear from this podcast. And always do your own homework and research before investing in stocks. Let's see what else. Oh, don't forget to subscribe to our RSS feeds over here. And also, where is it? Oh, yes, please. We need more subscribers. Please click subscribe. And that's it, folks. Thank you for listening. So I'll catch you guys next week. All right. Oh, yes. Before I leave, we're going to be switching this from every Monday to about every Sunday. So hopefully we won't have too many issues. All right. Catch you later.